Hi guys, good evening. Welcome back to today's class. All right, I'm just connecting to your chat box. Hope you guys are doing good. Um, Guys, today the class will be for half an hour. All right, so I'll be taking you through the cash flow, the balance of cash flow concepts. So I'll be winding it up by 9:30. All right. Now we'll go ahead. So in the last class, we were talking about the we were talking about so many examples and all those stuffs, and then we solve few illustrations, and in that we were about to start the cash flow from operating activities. Correct. Why? Because I've done with investing and financing and operating activities. I left it open. Why? Because there are two methods to prepare it. First of all, what is it? Why there are two methods, guys? Because operational activities. When you talk about operational activities, it is not that only these transactions are happened only via cash. There is something called credit. You're getting it? Because see, I purchased goods for my shop. Suppose I am a grocery shop owner. I purchased goods for my shop. Now that purchases is a operating activity, and obviously my cash should have gone outside. Correct? No, because I purchased goods from the for my shop means I would have paid cash and then I purchased. So it is an expense. So it is a cash outflow. So it is a outflow from operating activity. That is the reality. That is the essence. But suppose instead of that, if I tell like this, I purchase goods on credit for my shop, which means here I didn't incur any cash outflow. Why? Because here I just borrowed the goods. Correct? No, not borrow. I just purchased the goods on credit, which means I said that vendor, I told that vendor, Baba, I will pay you in 30 days time or 15 days time or 45 days time. So here literal cash flow didn't happen at that point. So cash flow is happening 45 days later on. You're getting it? So here what is happening here? While you did the purchase at that point, cash flow didn't happen. But the cash flow for that purchases happened 45 days later as what? Payment to the creditor, payment to the supplier, payment to the vendor. So please understand, when you see the transaction payment to the vendor, you may feel that what activity it is, ma'am? Payment to the vendor to which activity it is? Because we are borrowing, so we are paying money there. Or what is it? Payment to the supplier. So where it will come? What are, because of which act, financing or investing? No, it is operating. In your question they'll say payment to the creditor, payment to the vendor, payment to the supplier. So which activity you will put? Straight away it will be coming under operating activity. Why? Because that payment to the vendor, payment to the supplier, payment to the creditor is happening because of what? Because of one activity that has happened earlier. That is nothing but your credit purchases. Purchases is nothing but an operating activity. The same thing goes with sales, guys. When I made a sale means what? I sold, suppose I sold 1 kg potato. Now 1 kg potato I sold, I received 20 rupees from my customer. Now 20 rupees is my cash flow. Correct? Now it is an inflow, right? So he paid 20 rupees. Yes, fine, I got 20. I put it in my box, cash box, done. But think like that. The customer said that you give me some time, I'll repay in 20 days, 30 days time. So today he purchased that potato and he went. But later, a week's time, he came back and he paid that 20 rupees. Now, receipt from the customer, receipt from my debtor, cash received from my, bills receivable, debtors or trade receivable, accounts receivable. So now you might think from where this inflow will be shown under. So now you have to tell because of what this transaction is happening, because I made a sale earlier. So sale is an operating activity. You're getting it. So here there are, because when it comes to P&L, ma'am, but if you didn't care about these type of things when we talk about investment and financing, please understand. When I purchased an asset, all right, when I purchased an asset, again, there also the same thing. The creditor, if I purchase that asset on a credit, means there will be a loan borrowings. Correct? I'm raising a funds. Correct? No, so I'll be repaying it. You're getting the point. So all these things you have to look further. So how it is happening. So that's the reason for our operating activities, we have two methods to find out. One is direct method and another is indirect. In India, indirect method is the popular one, and we are following indirect method in our financial statement. Rather than direct method, we will be using indirect method in our financial statement. You're getting it? What is meant by direct method? Here, we take all the cash receipts, only cash, we take only literal cash inflows and cash outflows that is happening because of operating activities. You're getting it? We will not take anything other than that. Whatever the transaction is, all right? Whatever, salary paid, only if you paid, you will take it. Ma'am, I didn't pay, I'm yet to pay, don't take it. Even though it is your expense, that's fine, but don't take it because you didn't pay it. All right. Interest received, ma'am. Interest is my income, ma'am. Other income, ma'am. It is not from investment. It is my general income. So in that case, interest received, yes. If you receive, yes. Yet to receive, no. Discount received, ma'am. You received, yes. If you yet to receive it, no. So literally, whatever it has been done via cash. Okay. Literal meaning you have to take it. Then what if it is towards any operating, any kind of sale, purchases, all expenses, any expenses, guys, electricity, advertisement, water, salary, what I can say, what not, you name it, all the running expenses, okay, which you incur in cash. You take one P&L, you take one statement of trading account or P&L account, fuel, power and power charges, and then what not, you name it, guys. Sab kuch, whatever the expenses, you name it. All right, sponsorship, technical charges, professional charges, so many stuffs. Whatever it is, take all those. If you paid in cash, yes. Receipt the same way. I made a sale. So the sale, ma'am, I received paisa, ma'am. Take receipts, all the cash receipts from your sales. Ma'am, I made 20 sales in that month. Out of 20 sales, the total value of 20 sale is around, say, 35 lakhs. Out of 35 lakhs in that during those period, I collected only, say, 25 lakhs, ma'am. Now, how much I will be showing cash flow from operating? Only 25 lakhs, not 35. Remember that you will not take 35, you will take only 25. So literally, how much ever you collected or you paid cash for your operating activities, that you put it in one format. So receipt minus payment will give you the or cash flow from operating activity. So this is called direct method. Here you will completely ignore all the non-cash items, provisions, depreciations, accruals, outstandings, sab kuch you will ignore if the cash is not dealt in, if the cash is not literally impacted. You're getting it? I'll go to the indirect later. This is the format how we will prepare. In your exams, there won't be any format questions, but if they give XYZ questions though, then you should be able to solve this. You're getting it? So that's the reason I'm showing you the method how you will prepare the, cash flow from operating activities via direct method. See, if you see here, I have taken whatever the cash receipts only I have taken. I didn't take the entire sales. Please understand. So whatever I receive via sales, whatever I receive via any other income for that matter, operating income or any other revenue which I'm going to generate, if I received, then I will take minus whatever expenses I have made, payment I have made. Okay. In that one thing, you need to be very careful here. Direct taxes paid. Here always please remember taxes paid, direct taxes paid. So direct tax in the sense income tax. Why I am laying stress here is, please understand, usually why first of all it is coming under operating. Guys, understand, your income tax is coming because of what? Because of your net profit. When you earn a profit, you have to pay tax. That is the ideology, correct? No, that is the rule. If you guys know taxation, since you guys are individual, might be, so when you earn income you will be paying taxes, correct? Now, right, for the corporates, how it will work is like whenever you have a profit, all right, it's not that whenever you make a sale, that is indirect taxes, GST will come into picture. But when it IT, indirect taxes I'm talking about, sorry, direct taxes, income tax I'm talking about. So here what happens, whenever I am having a profit, all right, whenever my income minus expense, whatever it is, that is my profit. On my net profit, I will be paying taxes to the government. Now, why I stress the word paid here? Why means what happens usually, see, when you prepare the financial statement, you may not aware how much taxes it will be. All right, because there is a separate way of preparing tax computation, because we have so many provisions under Income Tax Act. So it says that, depreciation as per books, it has to be disallowed. So many stuffs are there, guys. It's completely, out of, it is not your syllabus. But please understand, until we prepare the tax computation, we will not be knowing what is the exact taxes for that year. But accounting standard and all these gap, that is generally accepted accounting principles, what it says is make a provision for it, which means I don't know exactly how much it is, but I may expect that this much tax might arise when I finally compute my tax computation as per the Income Tax Act 1962. I may come up with, say, again 1961, the act was, this one came into force in 1962. Somebody will find this, ma'am, you said 1962, 19, that is not your cup of tea. First of all, income tax is not there in your syllabus, please understand that. All right, now coming back, so now what will I say, maybe 1 lakh rupees might be my tax expense, or tax might be coming in. So I am providing now only, I am keeping aside 1 lakh out of my profit for direct taxes, for income taxes. So which means literally I am not paying. I am just doing what? Setting aside. I'm just making a provision. So now, is it a cash flow? The answer is no. There is no cash impact here. When cash impact will happen? Cash impact will happen when I literally make the payment. You're getting it? So while I compute the tax, ma'am, why then you can put that figure only, no, here? Why are you putting, provision and then you are considering payment? People will ask. That is, it's not like that it works. Understand? Because once we finalize the books, we'll prepare the financials. Financials in the sense financial statements. It is at that time we will not be filing the income tax return. Okay, first we need to get the signatures of the directors, auditor, and everything. Members have to agree everything. Once it is done, then the same information will be keyed in the income tax return. And after applying the provisions of income tax, my tax liability will be calculated. There is a time gap between the actual financials preparation and the filing of income tax return. You are getting it? So that is the reason at the time of preparation, I may not be knowing the exact tax. Guys, that's the reason I'm providing provision. You are getting it? It is not that it is now I provided 1 lakh, tax is coming at 5 lakhs. No, I will be providing 4 lakh 80,000, tax may come at 5 lakh. I may be providing 5 lakh, tax may come at 4 lakh 80. So minimum difference will be there. You are getting minimum, only to a minimum extent it will be there. So that's the reason I always, in my books and in the income tax computation, there is this time gap, and because of that, provision is appearing in the books. You're getting it? So now what happens? You have to forget about the provision. You have to consider only the direct taxes paid. Okay? Only the direct taxes paid. Now, people will start to thinking, ma'am, you told only direct tax. What happened to indirect tax? GST, you didn't tell anything, no. Why you didn't tell? Why we didn't consider anywhere, no. Why you didn't say? Guys, understand. GST is neither your income nor your expense. Remember that. You collect as a corporate, you are a middleman. That's it. You collect from your buyer and you remit it to the government. You are getting it. So it's not like, you are getting it and you are keeping it with you. Nothing. That's the reason you are not seeing anywhere here. Are you getting the point? Yes, and all those things are covered in your, it is not your, GST or indirect taxes. It's not. Earlier it was VAT and all those things. It's not your own expenses. I would say, because you are, ma'am. I also pay GST on my. Yeah, you just pay GST on your purchases. Correct. Yeah, that is an input credit. That is an asset. When you purchase, it becomes an asset to you. That is an input credit. And when you sell it, you will knock it off. All right. So these are all tax things. So please keep away all those things aside. It is not your operational activities. Remember that. That's the reason we are not talking about GST here. We are talking about only the direct taxes paid. You're getting it? Yes. So this is the direct method. And current assets and current liabilities, you know this very clearly because I have done this enough in the basic sessions. Like in the first two, 3 classes I have done this. I have told what does it mean. Current asset and current liabilities. All right. Now, why I went for current asset and current liabilities? Because of this. This is called indirect method of preparing your cash flow from operating activities. Now here what you do is you will arrive your cash flow from your profit. PAT. You're getting it? PAT. Earnings after tax, profit after tax, or net income after tax, and dividend also you can say. All right. So you will arrive. It's like it is like backward working. You will arrive your cash flow from your operating activities via net profit. You're getting it? That is indirect method. Here you will not consider what literally you have done, but you will consider only the net profit. From there you will do certain adjustments, then you will be arriving it. Now please remember, accounting has a concept called accrual. What is meant by accrual? Or what is this called? What is this concept called? Guys, understand? Whether you literally pay or receive, doesn't matter. But if that expense or income is related for that particular accounting year, you're supposed to account it. You're supposed to account it. That is the principle. All right, that is a we call that as concept of accrual. So that is a principle that we will follow. You're getting it? In accounting, in accounts, while we prepare books of accounts, while we prepare the company records, they say that it is mandate. It is not the choice, it is mandate. Whether you literally make the payment or not, whether you literally receive the amount or not, but if that transaction, if that event which has a financial impact, that has to be recorded in the books. All right. So what happens? You go and check any of your if you Google it out, you will get P&L, statement of P&L. You take any statement of P&L, you will be seeing so many things there. All right, I've already told you there will be 4 heads I've shown you. You go to the notes to accounts, then in that you can see. You will see depreciation. You will see loss on sale of fixed assets. You will see profit on sale of fixed assets. You will see dividends. You will see interest. in other revenues. And then you will see so many provisions. You're getting a provision for tax, provision for bad debts, provision for that, provision for this. You will have so many things there. You're getting it. Everything would have been accounted. All right. But all these things are cash item or operating item. That is the question here. So what they are saying in your statement of P&L, all right, you will be having all your incomes, whether it is related to your business or not. Say for example, guys, understand, as a company, as Infosys, or I am a software company, I invested shares of Info. I invested in the shares of Infosys. Now Infosys declared a dividend. Say I received 1 lakh rupees dividend from Infosys. Now where will I show this revenue? In my financials, in my books. Forget about cash flow. Ma'am, in cash flow you will be showing it in investment activity. Correct? No, you will be showing it in investment. In cash flow. But in my books I have to show somewhere. No guys, cash flow is not my book. Cash flow, which is my book? P&L and balance sheet is my books. Correct? No. So where will I show this? So dividend is my revenue. So in the P&L, in the revenue side, I will be showing other revenues. I won't use the word operating revenue, but I will use the word other revenue, other income. Under the head other income, I will put dividend income, I will put rental income, I will put interest income, I will put everything. Correct? Whatever I have received. If it is not related to my everyday business activity, if it is not related to my operational activity, I will show it under other income. So your revenue from operation plus other income will give you total revenue of that company minus all the expenses. Correct? No, that is called profit. Right? That format I have shown you in the earlier classes, if you remember, as per Companies Act, how you have to prepare. Now, what happens in that way? Your profit, whatever you have arrived, it includes even non-operating incomes. It includes even non-operating expenses. Correct? Right? So, because it is total revenue minus total expenses. So, total revenue has all your non-operating incomes like dividend, interest, all those. You are getting it. So the profit, whatever you are considering, that is after inclusion of all your non-operating incomes and expense. So you need to adjust that, no, because you are showing all those things under where? Under financing or under investment, and that head you are showing it. Correct? No, in the cash flow. Correct? No. So again, if you show it in the operation, it will be like a double time. Your cash flow will not match. So you have to adjust it. Correct. So what you will do, you will adjust for non-operating items which has been impacted in your P&L, which has an impact on your profit after taxes. Non-operating items you have to adjust. If it is an income though, you have to reduce it. If it is a expense though, you have to add back. You are getting it? Because from the profit, I have to adjust non-operating, means I have to remove the impact of non-operating, means what should I do? I should do ulta. Correct? No. So from my profit, I have to remove my profit. From my profit, I have to remove the impact of my non-operating income. So what should I do? If I remove from my total revenue, if I remove that non-operating revenue, my revenue will decrease. So because of that, my profit will decrease. Correct? No, that is the impact. No. So now what you should do? So you have to minus that non-operating incomes. Correct? No. So that is what I have done here. Less what? Non-operating gains and income, your dividend, your profit on sale of fixed assets. That's not my operational gain. Right? So other non-operating gains, I will minus it off. Correct? No? So first less what you have to do? Non-operating gains and incomes. First you will minus that. The same way, in my expenses side, I will be booking so many other expenses which is not related to operations, like interest paid on debentures. Obviously, I will be showing in my P&L as my expense. Correct? Na? Ma'am, but you told it will be shown in the financing activity. Guys, that is in the cash flow. Please remember. You'll be showing that under cash flow, but I'm talking about P&L now. Please understand. So interest on debentures is your expense. You will be showing it. You will be showing it in the P&L. Now, is it operating expense? No, ma'am. It is a financing expense, ma'am. So you have to remove that. Yes, ma'am. So what do you do? If it is a profit though, that expense I have to remove it though. What do you do? Expense has to be reduced, which means my profit has to be increased. Correct, na? So I have to add back, right? So I will add non-operating expenses. I will add what? Non-operating expenses and losses. So what and all I will add? Interest paid on debentures, dividend paid on, dividend is not an expense, forget. So any provisions if you made, provision is a non-cash item. I told you now 10 minutes before only. Correct, no? Provision is a non-cash item. Right now, because you are setting aside something. You are not literally incurring anything. So why are you giving it as an, why are you treating it as a cash expense? So remove that. It is not a cash expense. Correct, no? So all provisions you have to add back. All right, and depreciation is a non-cash item. It's a wear and tear. Literally you are not incurring anything in paisa. Literally there is no outflow there. It is just a provision you are doing it. It is just a way of allotting that asset over the useful life of that asset. That's it. Guys, understand, I purchased a laptop. Okay, I used that laptop for 10 years. Now that laptop, the laptop is not working. What I will say, fine, yeah, 10 years that laptop has worked, that's fine. Even if every year, even if I use it for, say, that laptop cost is, say, 50,000 rupees, 5,000 also it's done. It has worked more than that. I'm happy. You are telling, no, so what are you trying to do over there? You are amortizing the cost over the useful life of the asset. So you are just doing it. How many years it has come? It is useful for me. How many years I have used it? So based on that, you are amortizing the entire cost that you have invested in that asset. But tell me, is it really, literally, are you incurring any cash expense there? No, ma'am. I have paid 10 years before I paid 50K. That's it, nah. That time I purchased, that's it. After that, I didn't incur anything, but if wear and tear is there, usage is there. Yeah, that is there. So for that only you are amortizing. So literally you are not incurring anything. But as an expense, you have to recognize because my accounting standard 10, AS 10 is asking me to do that. So I have to do it. You are getting it. So because of the accounting standards, because of GAAP, because of Ind AS, I am parking few expenses. I am recording few expenses in my P&L. But that doesn't mean those are all cash expenses. Literally, I incur cash. No. So add back all your non-operating cash, non-operating and non-cash expenses and losses. So what you have to do, first thing, take your profit after tax and dividend. With that, you add back all your non-operating cash expenses and non-operating expenses, non-operating cash expenses and non-operating non-cash expenses and non-operating expenses. You are getting it? Non-cash expenses and non-operating expenses. You have to add back. Then minus non-operating incomes and gains. Ma'am, why non-cash income you didn't write it? Guys, you know that. Until you know that you are going to realize, you are not going to record any incomes in your books because it's a matter of prudence. You are getting it? You will not do that. That is the reason I didn't say there. You are getting it? So non-operating incomes and gains, you will minus it from your profits. You are getting it? Once you do that, you will be arriving at one figure called funds from operation. It is called what? Funds. I won't use the word cash flow. I will use the word funds from operation. Remember this word. This is important. You are getting it? Funds from operation. So funds from operation means what? After adjusting your non-operating and non-cash items to your PAT, whatever you are getting, that is called funds from operation. To this, you will make certain adjustments to arrive your cash flow from operating activities. What are those adjustments? I will do it in the next class, because today I have to wind up here due to some personal reasons. I have to wind up here, and I'm sorry for that. So next class will continue with that. Cash flow will be over, and we will be doing some more sums in cash flow, and then we will be moving ahead with funds flow. So once I finish this, because it is very much similar, funds flow, so we'll be moving ahead with funds flow. You're getting it. Hope you find this session useful. I'll see you guys in the next session. Have a great day.